All right, good morning, everybody. We're working on page 8, the example number 5, and I'm going to walk you through it. I'm handing out now the group project that'll be worked on after we finish this example. And remember, we're working on cash flows, but before we jump into the material, I just want to say congratulations making it through the semester. Especially in this class, accounting is tough. So you guys made it through, and I appreciate you. Look forward to doing well. You guys doing well on the exam. Fingers crossed, and seeing you guys next semester. Okay, so the first thing that we're going to work on is we're going to work on net cash from or used for operating activities. So for those of you who just got the handout, if you tear off the last page, it's got a worksheet for you so that you can open up to page 8 and 9 at the same time, and then still have this worksheet to do your work on. And you'll remember from last class, I had you guys calculate the differences or the changes in the accounts. And so down here, we have the change in cash, accounts receivable, inventory, prepaid, accounts payable, accrued expenses, and taxes payable. So those are the difference that we're going to be using for each of those accounts. Okay. So the first thing that we want to do is we want to say cash flows from or used by operating activities. And then we're going to start with our net income. And so where do we get our net income from? This is a layup. Where do we get our income from? You guys know this. No, well, your net income is from your income statement, right? Look at page 9. So what's our net income? 98,500, correct. And so now we're going to have adjustments to reconcile net income to net cash flows from operating activities. And remember, we're going to start with adding depreciation and so we have to figure out what depreciation is. And so how do we do that? We start by looking at the accumulated depreciation account and looking for changes in accumulated depreciation. Unless it's stated. So keep an eye on this stuff. Land costing $15,000 was sold for $15,000. A mortgage note was issued for $40,000. A building costing $115,000 was constructed. 2,500 shares of common stock were issued in exchange for bonds payable. What type of event is that? That's non-cash, right? We're going to report that at the end of the statement. And then cash dividends were declared for $74,670. So we're looking for depreciation expense, and so we're going to measure the changes between the two accounts. So we have change in accumulated depreciation. And so the buildings goes from 58 to 71. $71,300 minus $58,300. Oop. Yeah, it sounded like that was the correct number. $71,300 minus $58,300. So 13,000. And then we have accumulated depreciation for machinery and equipment. And that looks like 10,500. Is my math right there? Okay. So total depreciation is 23,500. Now we're going to add amortization. And we find amortization by looking at the specific related accounts to intangibles. And so we see here patents decreased by 7,000. So here in our statement, we're going to add 7,000. And then we have to look at removing any gains or losses. So we have to look over the statement and see if there are changes related to sales of investments or sales of property, plant, and equipment. So let's see what we can figure out. What are the changes in the property, plant, and equipment account? So we have buildings went from 260 to 375. $115,000, right? And so we know that was constructed. Okay, so we know that accounts for that change. And then now we have to look at the change in machinery and equipment, and it shows no change in machinery and equipment, but we do see a change in investments, right? Sorry, no change. But investments decreased by 84,700 minus 35,700. 84,700 sounded like it. 35,700, so 49,000. Okay, and now we want to look over the income statement, right? So in the income statement, we see there's a gain on sale of investments of 11,000. So we have to add back the gain. $11,000. I'm sorry, we have to deduct the gain because it was included as a positive in net income. So that's deduct gain. We add back losses. And then we have our changes in operating assets and liabilities. And these should be fairly straightforward from what we pulled here. So this is where I'm getting that information. Keep in mind the change in cash is going to be our answer, so we're not including that. So we're going to add a decrease in accounts receivable. That was 7,000. We're going to deduct an increase in inventory. That was 7,300. Two bless yous, good. And a third, bless you. All right. And now we've got to deduct the increase in prepaid expenses. And that one was 380. And then we're going to deduct the increase in accounts payable. That was 3,200. And then we're going to add the increase in accrued expenses. And that's 1,500. And we're going to deduct the decrease in tax payable by 500. Now we have to sum all these up. I get 16,620. Someone double check that for me, please. Which means our net cash flows, our net cash flow from operating activities. We add the 16,620 to the 98,500. And we get 115,120. Any questions? Okay. All right, so now we're going to be looking at cash flows from or used by investing activities. And so here we want to look at the investment accounts We want to look at the notes to find that information. And we want to look at the changes in our accounts. So we already did the changes in our long-term assets account, and we only saw a change in the buildings, which it says that we constructed it. We had machinery and equipment, there was no change. And then we also had land that they said costing $15,000 was sold for $15,000. Okay, so those are the three things that we're gonna have to account for. And we had a gain in the first one, so we're gonna have cash inflow from sale of investments. And we have to add the 11,000 gain plus the $49,000 cost. And we find out that we got $60,000 for that sale in cash. Okay. All right. And then we have a cash inflow from sale of land. And that was 15,000. And then we had a cash outflow for construction of building. And that was 115,000. And so we have net cash outflows for investing activities. And that should be 40,000. The next part, you're going to have cash flows from or used by financing activities. And so here we're looking for dividends, we're looking for changes in debt, and we're looking for changes in equity. So if we come up to the top first, we see that cash dividends were declared were $74,670. So you have cash dividends declared $74,670. I'm going to go up here. $74,670. So when we think about our dividends payable account, it had a beginning balance of 10,000. We added 74,670, right? Because we declared dividends, so that would have increased our liability. We have an ending balance of 14,000. If we add those up, we get 70,670 is the cash paid for dividends. And that's 70,670. Okay, so that's going to go in Cash paid for dividends, 70,670. And then we had a mortgage note was issued for 40,000, but it doesn't say what the mortgage is on. So we just know that we issued debt. So we have to cash inflow for mortgage, and that's 40,000. We go up and take a look at our stock section, and we see common stock, 75,000 change, right? We see bonds payable, $100,000 change. We want to make sure that we account for all of those pieces. And so the way that we do that is we look and say, okay, this was related to the change in bonds payable, right? That's the $100,000 difference. And that is a non-cash transaction. So we have cash, net cash used by financing activities. And that's 30,670. We had our net increase in cash, which was 44,450. So if we take the 115, 120, and we subtract the 40,000, and then we subtract the 3,670, we end up with the 44,450. And then you'd have supplemental disclosure. And then you'd have issued common stock to retire bonds payable for 100,000. I'm going to try to make this bigger. I know it'll be harder for some of you to read, but I want to, I'm sorry, not bigger. I want to make it a little smaller, but I want to get as much in there so that anybody had any trouble, they can get everything down. Once you've got that down, we'll take a quick talk. We'll talk quickly about free cash flows, and then we'll jump to the group problem. You guys can go ahead and start on your group project. You're not waiting for me. I'm just pulling it up for the people that are online. So this one is going to be, we didn't give you one for chapter 12, right? I didn't give you a group project for chapter 12? Or did I? Yeah, yeah. Yeah, I don't think I gave you a group problem. So this one will count for 20 points. Okay, I'm going to stop recording now. But if I give any tips or anything, I will put them in this room so you don't have to leave until the end of class.